Today, we are looking at GBP JPY across the 15-minute, 30-minute and 1-hour charts, covering the price action from early May through to today's date, May 11th, 2026. This analysis is based strictly on the structure available right now and is valid until Friday, May 15th, 2026. If you're watching this after that date, remember the market structure will have changed. Welcome back to the Trader's Edge report, where we break down real market structure with no hype, no nonsense, no wishful thinking, just trader-to-trader analysis. On the 1-hour chart, GBP JPY is sitting inside a broad corrective phase after that heavy downside move earlier in the month. Price has stabilized around the 213 zone, which is acting as a temporary balance point. This is the level where buyers and sellers are fighting for control. The major supply zone sits above, created by the impulsive drop, and until price can break and hold above that area, the higher timeframe bias remains cautious. Volume is tapering off, which tells us the market is waiting for a catalyst. The 1300 level is the key decision point. Above it, we can talk continuation; below it, we can talk deeper correction. Dropping to the 30-minute chart, the compression becomes clearer. We've got a sequence of lower highs forming while buyers continue to defend the same level underneath. This creates a tightening range, classic breakout energy building. Wicks on both sides show liquidity grabs, meaning the market is clearing out early traders before choosing direction. This is where the story of the pair becomes obvious. Sellers are leaning on the top of the range, buyers are absorbing at the bottom, and whichever side runs out of liquidity first will drive the breakout. This time frame gives us the structure we need to anticipate the next move without guessing. Now on the 15-minute chart, this is where execution becomes clean. Price is hovering around 213 to 214 with small liquidity sweeps on both sides. This is ideal for break and retest setups or liquidity grab entries. If price sweeps the lows and reclaims structure, that's your bullish trigger. If price taps into the upper liquidity and rejects, that's your bearish continuation trigger. The 15-minute chart gives us the precision needed to time entries while respecting the higher time frame narrative. This is where traders get their edge, not predicting but reacting to structure. So what's the overall read? The 1H shows a market imbalance. The 30mm shows compression. The 15mm shows the execution window. If GBP JPY breaks above the compression range with a clean retest, we can target the next supply zone. If it breaks down, we follow the momentum into the next demand pocket. No guessing, no bias, just structure and discipline.